The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX, and you can see here we're in a little bit of a downtrend. Next, we will move over to our favorite place across the pond, London, England. And folks, I thought politics were bad here. Man, what they did to that poor young lady, Theresa May, yesterday should have been against the law. I just was shocked. I have a lot of friends over there, and they were shocked too, but they said that's normal. Well, I hope it never gets this bad here, but it's bad, but not like that. That was not very nice. You got to treat people with respect. But boys and girls, if you remember the movie Trading Places, when Clarence Beeks put the $50 bill, three $50 bills, into Lewis Winthorpe's pocket to get him to pretend like he was stealing. This was at the Heritage House in Philadelphia, Pennsylvania, and the president of the Heritage House said, "All of our members, we have a grave situation forming us at this time, and I'd like to tell you here at TFNN, we have a grave situation facing us at this time." I understand from good sources that this young lady from New York, Ariza Cortez, the 28-year-old congresswoman, is going to be on the panel that helps regulate Wall Street. And that, to me, is going to be very, very interesting. She was recently on one of the cable channels, and they were interviewing her, and they asked her what she thought of Roe versus Wade. And she said, well, those are the two ways that the Mexicans get across the Rio Grande. And I ain't making that up. Anyway, let's move on to something that's really important, and that is the stock market today, boys and girls. We are rocking and rolling. This is what we wait for. It may or may not happen, but we are up in the area where we've been waiting for a long time. And not only that, but we've got a very, very interesting Fibonacci number staring us right in the face within about 8 or 9 points of where we are right now. Bill, God bless you, my friend. You're absolutely right. Thanks for keeping the humor in the room. Okay. Anyway, we've got all of them lined up, folks. We got the Dow Jones, we got the S&P, we got the Nasdaq, we got the Russell, we got the whole 9 yards. So this should be an area where we might have a very, very significant top. However, as we know, this could certainly change, and it can go a great deal higher. We don't know as of yet, but everything is set up for it. Gartley, in his book, page 221 and 222, he described the Gartley pattern where the ABCD structure goes in after a top has been made, and Gartley said that was the best opportunity for entering a trade when that happens. So whether that's going to happen or not, I'm not actually sure, but I want to bring a chart that is important because it comes from our good friend Rich Anderson, and it shows the relationship of the 3-month Treasury bill and their bid to cover. And basically what it's showing is that the demand for our Treasury notes is dropping badly ever since 2012, and now we're down to the area very, very close to 2008. Now, whether this is going to mean much on a longer term basis, it does tell, we'll be able to see that that's going on. Yes, Maria, we're talking about the Bradley model. God bless you, young lady. We'll get this up here to let you folks take a look at it. Remember, the Bradley model, again, is certainly works part of the time. Sometimes it does, sometimes it doesn't. If you remember, we had Stan Harley on yesterday, and Stan and I were talking about the Foundation for the Study of Cycles meeting back in 1988. I happened to be one of the 6 speakers there that day, and there were a lot of people. There were 150 people there, and there were some really smart people, very well known. Paul Volcker was there, Martin Armstrong was there, Paul Tudor Jones, Peter Eliades. Oh my gosh, there were 3 or 4 others that I can't think of all of them, but there were a whole bunch there. And I was giving a speech, and I was about second on the thing. My book had been popularized by Commander David Williams, who was the foundation for the American Federation of Astrologers president. And I'll tell you that story just a little bit later. But I was up at the podium, and they had this beautiful screen that came down all automatic, and I was using my to show the charts. I was putting them up on the screen, and there was a really important date on the Bradley model that I wanted to show, and so I circled it right on the screen. And I did it with one of these black pens. The problem was I should have done it off of the podium, and I didn't know that off the glass thing off the podium. But anyway, everybody started to laugh, and I had to get that stuff taken care of. It was about $150, but it turned out to be really good. It was really funny, and everybody laughed, so that was good. Anyway, I never had any trouble with speaking, because I figure I'm going to make a fool of myself enough that if you can't laugh about what you're doing, you might as well, do something else. So public speaking has never been a problem with, me, but, that's just the way it goes. Radio might be a little bit different, however. Oh, the other part was when my book came out, found the Astro Cycles, The Trader's Viewpoint. Commander David Williams, who was the number one guy in all of astrology and cycle stuff. He was a very, very strong friend of Edwin Dewey. He was on the Foundation for the Study of Cycles, and he endorsed my book, and that really made it very, very popular. It was the first book I ever wrote, and so they invited me down to do the book. But in July of that year, I was invited to go to Las Vegas for the American Federation of Astrology meeting, and that's where I met Arch Crawford. And here I was, scared to death, because there's 1,000 people there that knew astrology, and I knew very little. But the book was popular, and one morning I went down to get something copied in the room, and my book was $95, and there was a young lady there. She was copying my book. She was making 5 copies, and I said, gee, that's an interesting book. I said, you're making 5 copies? She said, yes. She says, it's a very popular book, but it costs so much that, 5 of us had to go in to get 1 copy. And I said, well, maybe I should sign all 5 copies. And she said, why would you do that? And I said, I'm the one that wrote the book. And she was very, very timid at that point. And what I did was I said, why don't we stop doing this now, and I'll just give you 5 copies so you don't have to copy them. That way you won't be, breaking the law. And so anyway, that's what I did. I thought it was rather funny at the time, so we'll wait and see. Wow, the first section's gone already. That's either a good thing or a bad thing, but I'm going to share with you my 2 cents worth here on one of the markets that we're watching very closely. Stay tuned, because it's going to be very, 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 very important today. This is big time stuff that we're looking at. So let's keep our fingers crossed and see if these markets are going to act the way we think they're going to act today, but it's going to be interesting no matter what. We have a lot of astrology things occurring now. This is the tail end of this cycle thing that Norm's been talking about, but we'll be watching it real closely here. Yes, that is the Bradley model, Jay. You're correct. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, someone's asked a question about the Bradley model and why it's so difficult. Folks, it inverts back and forth. The dates are pretty good, but why it inverts, I don't know. Yeah, Marshall, you're absolutely correct. Back a few years ago, I'm talking 30 years ago, when I was down at that Foundation for the Study of Cycles, one of the reasons I was there is because the Bradley model had been working for several years, and I'd been posting it, and I'd been on these contests like the, not contests, but with the Timer of the Year stuff, and it was working really good. It worked really good from 88 through, not even called to crash, 88 through 91 or 92. There's about a 4-year period, and then it went wacko up and down, you know, back and forth. And one of the things that Norm Winsky talks about, is the fact that he uses the retrograde motion of the planets to try to figure out when it's going to invert. I have not been able to figure out anything like that, so all I try to do is match the patterns with the date. We've got a date. We're over a whole bunch of stuff right now. We've got this eclipse coming up here pretty soon. Here on Monday, we got a lunar eclipse. That's on the holiday. Here we are, on the 16th, so we're in the zone here where anything could happen. We also have on Friday, we have a Venus, we have a Mercury, and I think it's Mercury, Venus, or Mercury, and we have a Sun squared, Uranus. There's a lot of things happening, so I don't know what they mean, but that's the best I can get. I try to keep it as simple as possible. Now I'm going to give you a one-time shot of what I'm looking at today, folks. This is the AI program that uses artificial intelligence. Here's where we were last night. You know what that you can see the red thing there. This was the inverted model. This was the red, as you can see here. And you'll notice here at around 5:30 this morning, New York time, this thing stopped working. It started to go down, and the other one started to go up. So what I'm assuming now is coming into today, and you can see today's forecast that we're forecasting a high between 9:30 and 10. That's what we're looking at. Now, a way to handle this is if you're lower by 11 o'clock, and that high is in up there somewhere, where it could ever be, somewhere between 2610 and 2950. I don't know where that high could be, but if it's lower at that time than it was around 9:30, that's telling you that this particular model is actually, working. Now, it's time sensitive, has absolutely nothing to do with price. And it was based on the fact that how the Tomahawk missile guiding system was worked. Once it comes out of the water from the submarine, it just blasts out of there, has no idea where it's going. Once it's 300 feet above the water, it begins to process data. And then it's programmed where it's supposed to go, and then it starts in that direction. And it continues there unless it's reprogrammed. And it's all based on a timing system, has nothing, well, the market thing is not based on time. Dennis Regan, the man who had the original idea on it, made a pretty good case for it. And he's a really brilliant man. I mean, he had a picture, shaking hands with President Reagan, when he did the Tomahawk project. So he must have been a pretty sharp dude. He was certainly eccentric. There's no question about that. But anyway, that's what I'm looking at, 10-4. Remember, the 61% retracement in that S&P is at 2622. And that's, I think we've been as high as 2616 so far, and we can get there very easily. I wouldn't risk more than 10 points on that, which is $500. And when you've got a contract that's worth on the north side of 135,000, that is not very much. This may or may not be the top, but this is the same type of pattern that we were looking at when we were bottoming in these markets, back on December 26th. We were making 1.618 expansions in the NASDAQ. We were making in the Dow Jones Industrials. The S&P was a lot stronger. It didn't make that big correction. But the New York Stock Exchange Index, the one that is the one that we lead for, because that's the main one, although the big stocks, you can see that on that date, we were right there on that weekly. That's when we made our stop. That's when we made our low right there at 10,680. That was the 61% retracement of that low of 2016. And that's why there's a possibility that this could be extremely bullish, folks, because we've talked about the index for the banking index doing exactly the same thing. The fact that the New York Stock Exchange did exactly the same thing. And then we've also shown you how the emerging markets and how China has actually done the same thing. And even in Hong Kong, they've done the same thing. So there's a possibility that that low we made on December 26th is a major, major low. Now, how will we know? Well, if this top doesn't come in, or maybe it comes in for a day or two just here, maybe it only lasts 2 days, maybe it only lasts 2 hours. But if we go blasting through 2,700 on that E-mini S&P, we got a really strong possibility of making new highs, and even substantially new highs. And that's because those lows are really, really important. And on the other hand, if those lows break, and I'm talking about 2310 in the S&P, do not be long stocks. That's not going to be a good thing. Now, someone's asked a question, how does this relate to what's going on in our government being shut down and what's going on with Brexit and stuff like that? Folks, that's so far above my pay grade that the old cowboy doesn't look at it very much. Actually, when I ride on my little burro, Walter, as we go out into the desert, searching for food, we sometimes ask ourselves, why don't we study the fundamentals a little better? And I say, Walter, it's gotten me this far, so I'm going to be a little more patient. Someone's asking a question here. A lot of volumes on the volume. There was not much volume that day on the 26th, the day after Christmas. I don't know if that's going to mean much at all, Maria. Sometimes the volume is important. Well, I'm sure it's important, but I look at the prices. On your equity statement, Maria, there's no place where it shows volume. But when you're looking at your charts, you're looking at a price, and that's telling you where all the buyers and sellers are coming together, and that's all I'm looking at. So volume, Tom O'Brien does a great job with the volume, but the only time I look at volume is when we have a record volume. That's really telling you something, and that's really, really important. That's a key thing to look at. As a matter of fact, on the second part of this show today, I'm going to bring one of the markets that we talked about just the other day and how it's going through, what we thought might happen, because it's really interesting, and this is one of the favorites of Mr. Z. It's natural gas. I know most of you folks don't trade it, but my goodness, if you take a look at this chart that we're going to talk to you about in just a little bit, you're going to be really interested how Fibonacci's work and how it works. So we'll see. We'll have to be. We could certainly go back down to 2440 without any trouble at all. That's only 200 handles, and we're moving in 300 and 400 handles. 200 handles is just a 50% retracement. But the key thing today is where we are, up near this Fibonacci number, 2622. If you like Fibonacci, this is the kind of day that you get ready to have a party, and sometimes the party is no good and you have to go home early, but that's what we're watching here. It doesn't get any easier as far as risk control as we look at that. As we come in today, we've been as high as 2617. We're trading at 2615 right now, so it's acting just like it should be. So we have to wait and see when we get to that time, which is 10 and 10:30. We've had some news reports out already, but that's still a little bit later. The bonds are still drifting down, and I think we are looking at higher interest rates, longer term for sure, probably shorter term. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we posted the chart of that natural gas where we had that big island reversal, and we went up to the 78% level and the 38% level, and then we had a little bit of a sell-off. What I'd like to do is to show you what happened after that time. Let's just get this up here so we can get here and take a look at it. You'll notice here, after we went up to that level of 375, Yesterday, we came all the way down to the exact 78% level of where the gap was on Sunday the 13th. That's only part of the excitement on this, because if you'll see those two little red boxes there, one shows the 78% level that I was just telling you about, and the other one I was telling you is the fact that we were looking at one that looks very, very similar to the 1.618 expansion of that number. That tells you that you're looking at something pretty exciting. So I believe that we've had a pretty big move here, and we're ready to go a lot higher in natural gas. Folks, from last night to where we are this morning, that thing has moved $3,000. That's the equivalent to 60 S&P points. That is a whole lot of points. Just 1 second, please. I have to turn off a limit minder here, and it'll only take me a second, hopefully. And just give me 1 second. It might maybe take a little bit longer than I thought. Just 1 second. I got to get this off here. There we go. Control. Hold on just a minute. Just a sec. Control R. I got to turn it off just to say it's driving me nuts. There we go. We're off. We're okay now. Anyway, I know you folks don't trade it very much, but if you're really interested in and you trade actively, boy, you might want to take a look at that one, because that thing really follows the numbers well. And as far as volatility, there is none better. It is by far the best there is, and there's not much more you can say about it. It's really a big it's a big deal. So keep an eye on that one. It's pretty important. We're still working a little bit higher here in the S&P. I see we're getting ready to take the highs out up here. So watch that price at 26.22. It's going to be interesting, to keep an eye on that, because it's very, very close to an area that's going to cause a little bit of problems technically, but it's only probabilities, folks. It is never certainty. That's the main thing that we're watching. Now for the big news. This is something that we all should pay attention to. I don't know if well, I'm sure TFNN is so big into education, they're not going to say too much about this, because the Foundation for the Study of Cycles has moved into a new era, and they're bringing a whole group of people. I mentioned them before: Tom DeMark, Dr. Richard Smith, Jake Bernstein, Larry Williams, and others have put together. They're going to go back to giving information and not selling programs and stuff like was the last 6 or 7 years. And here I've posted in here a cycle program that's going to be presented by Jake Bernstein. It is a free seminar. It's going to be 2 hours. Jake's been around for a long time. Jake and Mark Douglas were very good friends. In fact, Jake Bernstein was the fellow who convinced Mark to write his first book, The Disciplined Trader, before I knew him back in 1983. Jake has been around for a long time. I believe we're very close to the same age, he and I. I'm 2 years older than Larry Williams. I think Jake is closer to my age. But they were involved with the first bringing computers and data to us back in the 1983 area when we had CompuTrack with Tim Slater. So these guys have been around for a long time. Actually, Walt Bressert was one of those guys, and I'm sure if Walt were with us now, he would certainly get involved with it. But I think it's going to be a really good thing. The link is right there. You can see it right there. If you don't have the link, just give me an email and I'll ship this link to you. You just go on there, post it into your browser, and it'll be from from 4 o'clock to 6 o'clock Pacific time on Saturday. And it'll probably be archived, but I don't know, but it's going to be worth it. Anything to do with cycles, especially since they're coming up with changing the format and stuff for the Foundation for the Study of Cycles, it'll be great, because cycles are related to astrology, and Edwin Dewey was really big in the astro part of astrology, because it was really 1946. Wow, he's old. He's a lot younger than me. Shut the front door. Anyway, let's it was the same birthday as my mom. Let's remember, folks, that these cycles sometimes they are astrological, and like I was mentioning, Edward Dewey was good friends of Commander David Williams, and who was the dean of our financial astrology. He wrote a great book on financial astrology back in the 60s, and it had a lot of stuff going on and things like that. So we'll see how this thing works out. I think it'll be worth your time. The good part is, folks, it's free. If you don't like it after 10 minutes, you don't even have to worry about walking out and leaving the room because they can't see you. So I highly recommend this. I really do. That's my 2 cents worth. So that's neither here nor there. So pay close attention to it. We've been asked to take a quick look here at Bitcoin. I still believe this is if you'll take a look at this, this would be I believe it's a 4-hour. Yeah, it's a 4-hour chart on Bitcoin. It's showing that we're looking at around 3,400. We saw 3,500 today in Bitcoin, so we're getting very, very close to it. If we go down and make a new bottom below that butterfly bottom that was down there at 3,200, I think Bitcoin could be in big trouble. But I believe this Gartley pattern should hold. We'll have to wait and see. Now, Bitcoin trades 24 hours a day on these crazy exchanges, so frankly, I don't know how much trust to put in it, but it's been following it technically, so I think you have to, pay close attention to it. That's, basically the bottom line. So we'll do one thing at a time. Someone's asking a question again about the Bradley model. Folks, the Bradley model is it's just a bunch of cycles that are weighted, and sometimes they work and sometimes they don't. But when they do work, they work very, very well. That's the bottom line of what we're looking at here. So we're getting real close now. We're at 26.1850, and we're looking at 26.22. Probably go through it like melted butter, but that happens in the world of trading. So not to be worried about it. Now the euro is also started to weaken up again. We got down to that 13.75 level. That was a tad below. Let's just get this up here. So since we talked about it, oh, don't tell me. Here it is. Oh, did I lose that euro chart? Shut the front. No, I've got it right here. Thank you very much. You'll see that we went right down to just a tad below the D level, and we are, actually we're trading at the 78% level, folks. We got down to 113.70. That's been the low so far. We're trading at 113.80. Anything below that 113.60 level means we're going to be going lower. That dollar will be going higher, and that'll mean other things will probably be jumping around also. So these are some of the other things that we got to keep an eye on, because we're over this big cycle stuff now, and the fat lady's getting ready to sing, but who knows what's going to happen. I have a really interesting story from China when we come back from the break that you're not going to believe it. I saw it this morning. My lovely bride showed me something it shocked me. I'll share it with you in just a minute.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, they have something in China called quantum satellite. And Sarah showed me the capability of this, and it absolutely startled me. She asked me to pick a city, and so I picked Shanghai. And you could go into Shanghai, and you could scroll down, and you can actually see people's faces. They could be, actually, you could identify them very easily. You could see the jewelry, the watch brand that they're wearing, license plates on the car. It's just absolutely, it's related to 24.9 billion pixels, whatever that means. But that is, it's amazing that the stuff that's available out there. So Big Brother is out there watching, folks. Always have a clean shirt, and as Grandma said, always wear clean underwear. So that's the main thing you want to remember as you get older in life, of course. Anyway, let's move on here to a couple other things. By the way, Ruby, I see your sugar is smoking, so that's good, and we'll see how much it's going to go higher. We'll keep a close eye on that. The other one that I posted, it's Monday, Tuesday. The underwear go Monday, Wednesday, Friday, and then Friday, Saturday, and Sunday is a free day. You either have to wear them or not wear them, so who knows. Anyway, we'll move on. By the way, the tickets for the Super Bowl, average ticket price is only $6,800 this year, folks. Can you imagine a family of four going to that at $25,000, not counting room and board and all the transportation? Are you joking me? I think it's better to watch it on TV, so we'll see. Anyway, since the Eagles aren't going to be in it this year, I probably won't even watch it, but maybe a little bit, but we'll see. We usually have a little poker tournament here in Tucson on Super Bowl Sunday, and that's always fun to get in because you play in for $50 and you got a chance to win $400 or $500, and that's always a lot of fun. Anyway, let's move on to a couple other questions that people have brought to our attention. I just wanted to show the chart here for sugar because we were looking for it to have a possibility of a pullback, and here again, we're trading way above $13 a pound now in sugar. That takes us up to about $13.40 is what we would be looking for, and we haven't had a correction in that yet. But went right down to that 78% level and held, and then away it went. So whether that continues on in that direction or not, who knows. Someone else sent another interesting chart to us, and that's our good friend Jim Bartolione from V50 Partners, and it's basically showing you the relationship between the Staples Index and also, yep, Bart, that's the one. We'll have Bart on as a guest here. He's pretty busy, but we'll get him on as a guest to talk about it. You'll see it shows the relationship, the consumer staples to the NASDAQ, and basically that blue overlaid line is the NASDAQ inverted. In other words, if that index is going down, that means the NASDAQ is going up. And if this ratio starts to go up and the NASDAQ opposite and it sells off, this means that the NASDAQ is inverted and it's getting ready to have a big move. And we've already had that big move. So you can see it's right down into that support zone. And that's why we're at such another key level. So I'll have Bart on the show here hopefully next week, and maybe he'll explain this and some of the other cool charts that he has, that he watches. He does a lot of intermarket relationships and how these things work. So we'll see what's going on. Yes, I believe the question is the natural gas going to go higher? I certainly believe it is because of the chart that we posted. Let me just get it up here and look at it again. It's worth it because it's such a beautiful chart. It shows the big island reversal that we had on Monday. You see there, January 13th, that low was there. The market backed off from 336 down to 330. And then what it did last night, it made an exact, I drew the black line there, it was an exact 78% retracement at 339. You can see it marked there in the little red box, 0.786, but also it's a 1.618 expansion of that move that we had that took it up to the top. So that tells you that's a possible. I didn't even draw the ABCD patterns in on the way down because there were two beautiful ones that came in there at the exact time. And then look what happened. We exploded. We went from 339 all the way up to 355. That itself is an $1,800 move. Then it backed off. You'll see at 349, that was a 382 retracement. It just took an hour to do that, but this is a 15-minute chart. And then we've exploded and we're back to the old highs again. I mean, it doesn't take very long for this thing to really get moving. The old high was 490, and this stuff moves like it doesn't even care about, numbers sometimes, because when it runs, it really runs. That's the main thing. Have we hit 22? Have we hit 22? Oh, there we go. 23. There's a number. So here's where the fat lady sings, boys and girls. So we'll see what happens here. Okay, let's move on here to a couple other things that we're watching. Let's get one other one up here to take a look at. And so remember, this is no, I don't do very much at all, Mr. Z, but I have a very, very good customer that trades it every day, and he's like you. He's really watches it. He's the one that brought this to my attention, because I, don't follow it that closely, and I've been focusing so much on the stocks right now that I didn't really take a look at it. But then I saw it, I said, wow, I got to draw this out and share it because it's so volatile, and that's it. And pork bellies used to be the same way. I mean, pork bellies were always jumping around, and pork bellies is the bacon side of hogs, and they just stopped trading them. I don't know why, but boy, that was always a good one to do it. I believe it was the old timers, and they finally, the guys that were there at the Merck, Maury Siegel and all those other guys, they just passed away or quit trading, and they lost interest in it. Then the funds never traded it, so that's probably why the pork bellies moved as much. So we'll wait and see. Yeah, we've got the gold trading at 1291. Gold's got to clear 1300 in order for it to get moving, folks. Silver's lagging badly, but palladium and platinum are moving a little better, but the gold is not working. But gold does not look bearish right here, folks. The reason why is we've been up here. Let's just take a quick look at this. We've been up here at this 61% retracement on the weekly chart here now for well over 2 weeks. Oh, this is going on to the third week. We haven't backed off more than $11 at any time. We're trading at 1291 right now, and any move above 1300 is going to be, it's going to be interesting to see what's going on. That platinum and palladium are really difficult, Mike, and the reason for that is they are relatively thinly traded for sure. I'm sure they're used quite a bit, but we'll see. The grains, they're coming down. This is what we want to see, Bob. We're talking about that soybean complex, and we want to get it down a little better. It looks really interesting on a longer term. We're following it closely. I'm going to be doing a little webinar, hopefully in a couple of weeks for TFNN. We're going to focus on some of the really good things about harmonic numbers, how to handle the opening price, the key to looking at Fibonacci numbers and how to determine trend, and then also looking at the grains, from a longer time frame, to take a quick look at how some of these things going. But in the grains, what we're looking at here, is a buy zone somewhere in here that we'll be able to see. It's not yet for wheat, but we're getting closer to some of these things. But we got a lot of things to do here these next couple of months, so it's going to be a lot of fun. 877-927-6648 from the offices of Duke and Duke.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. Remember, we've got Norman, who calls it to the minute Winsky tomorrow. And right now we're going to take a look at this Canadian dollar. As you recall, we were really bearish this thing up at that 136.50 level. The high was 136.50. We've had a 4.5 handle drop. And you'll notice the very, very small ABCD pattern that occurred over the last 5 trading days. Folks, if that's not the sign of a dead cat bounce, I don't know what is, but it certainly looks a little negative to me. If we get above 133, then that might be different. But right now, it certainly has the earmarks of a very, very negative thing. Just to remind you folks, Saturday, they're going to have that Foundation for the Study of Cycles meeting. It's online. If you it's posted there in TFNN in the show today. If you don't have it, give me an email, larrypesavento@gmail.com. I'll ship you the link, and it's free, and it's 2 hours. If you don't like it, you turn it off. You can't get your money back, but that's as close as we can get, especially for a free one, but take a look at it. Anyway, I think it's worth it because cycles are fun. They're semi-predictable, and that's really what we're looking at in any of these markets is semi-predictable. So let's keep an eye on it as we go through and look at some of these things happening today. So tomorrow we will have Norm on, and he is always very, very interesting, and he'll show us how he's done in the past and what we're looking for in the future. But he's got some really big planetary things occurring, so that's something that will be very, very good. So that's the main thing. That's something that we want to keep a close eye on. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!